You did it. You built a successful business and made it look easy.
Hello, this episode of the Weekend Chart Prep is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Wright Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tools that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good morning, everybody. Good morning, y'all. Come on in. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just big spot if you don't hablo español. And you're in tune to another episode of the Weekend Chart Prep / the weekly price action recap. We're going to do a weekly price action recap today because last night was Friday Night Lights. I had to go to the football game. Yes, my eldest son, my namesake. Is that what you mean when they like your junior? One of my oldest son has my name. My younger son has my birthday. So Timothy Jr., right? He graduated last year. He was the football player. He has my name. Christopher, he plays in the marching band. So I still have to go to Friday night football games and Thursday night because I had to go because Timothy was playing and Chris was playing in the band, right? And now Timothy has graduated, but Chris still plays in the marching band. So I still have to go to football games. Now it's cool when you go to football games and your son is on the field doing his 1-2. That's cool. Every dad's dream. You hear the announcer say, Big Tim Rogers on the play. That's every dad's dream. But you will never hear the announcer say, Mr. Christopher, play that clarinet. You will never hear that. You won't hear it. So I'm there, sitting in the stands, waiting for halftime. Just do 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 do. Where's halftime? Okay, halftime is here. Go, son. Play that clarinet. I hear you, son. I can hear you over the whole band. And I'm paying. Oh my goodness. I'm paying $10 per ticket. $10 per ticket just to sit there and wait for halftime so that I can watch my son play the clarinet. I don't even go. I get to the game in like the second quarter now. My wife is there from the beginning. She get there when they first come in. She's there from the beginning. Send me the updates, and when first quarter almost over, I'ma head out because I'm only coming to see the band. Shit. I could care less what the team is doing right now. My son is not playing. Yes, I love the team because I still have a kid going there, but my son doesn't play, so I could care if they win or lose. Anyway, y'all ain't tapped in for that. That ain't what y'all tapped in for. Y'all tapped in to look at the weekend chart prep, right? You know what I was thinking about? You know what I was thinking about? I was thinking about can I do I think I seen something about doing polls. Can I do a poll pickleball September 27th? My wife just added something to the calendar about pickleball. I didn't know she played pickleball. How do you play pickleball? I'll be seeing commercials about pickleball all the time. I saw something about doing a poll. Can I do a poll if I'm doing I'm doing it through Zoom. I'm doing it through Zoom. I don't know. Yeah, can I do a poll? I be seeing people doing polls on YouTube. Oh, start poll right there. All right. I see it down there. It say start poll. I'm dropping a poll in the chat. Uh, Uh-oh. All right. All right. So I just dropped a poll in the chat on YouTube. Um, and it would be a we oh man, we ain't got nobody on here. I ain't gonna say nobody. A shout out to y'all that are here. I appreciate y'all. We're a very small, tight-knit community. Right now, it will be a I was laying in bed thinking about it. Well, no, I actually was sitting and I was watching Tony Baker's verbal cardio on the tube. Drop it on the tube. Just drop it on the tube. Right. Be a pre-recorded thing. It's be a pre-recorded thing. It'll drop. Let's just say either I don't know, either drop either Saturday or Sunday. Right. Either drop on Saturday or Sunday. Right. Because it's a wrap up of the week. Right. A wrap up of the week. Um looking at just covering um price for the week and also talk about like the economic calendar from the week for those who care about like the fundamentals side of the macroeconomic side of it, and then look at the economic calendar that's to come for the next week as like a wrap up. And uh yeah, yeah, it just be like pretty much just like kind of like what we do now, except for instead of being in the live format, right? It'll just be a pre-recorded video that drops on the weekend instead of doing like a live format. Because, you know, I don't be having like a set live schedule, right? For like the weekend. The weekend is like my time. And if I'm bored or if I ain't got nothing to do, I just get up and jump on live, right? So, you know what I'm saying? And I was thinking about doing like, cause like, and some people like the straight to the point type videos, right? And then like when it be like a live stream format, right? A lot of times people don't want to go back and look at a live stream after it's done if they wasn't there live. You know what I'm saying? Like, oh, that was a live stream. I missed it. You know what I'm saying? And they don't get the chance to do like the interaction. Like I'm talking back and forth with y'all and they sitting there watching me talking back and forth with y'all, but it was, so it'll be like a pre-recorded thing. So y'all let me know if y'all think that's a good idea. Right. Y'all let me know if y'all think that's a good idea. Uh let's get to it, man. Shout out to everybody that's in here. Shout out Marco. Um, so the post cast would be in place of live. So the postcast would be in place of live. No, I'm still like I'm a live stream channel. I'm not big on like recording and doing all that editing and stuff like that. I used to do that for a living, right? So I don't like all that editing and stuff. It drives me crazy to have to edit. Y'all don't know how painstaking it was. Speaking of editing, this episode is being brought to you by the Smart Money Manuscript. That's what I was about to get into. Smart Money Manuscript. Link in the description below, $69.99. It's a course that I put together that helps beginners all the way through advanced traders and investors. All right. If you're new, you want to get started. If you're almost there, if you're a seasoned veteran, it's something in the Smart Money Manuscript for you, right? It walks you through in a very specific way from start to finish in your investing and trading journey, right? I made short, straight to the point videos about all things that I've ever spoken about on this channel and put it into one package called the Smart Money Manuscript, and it's $69.99. It's hosted on WAP, right? If you purchase the course, I advise you to download the WAP app on your mobile device because it looks better on the app on your mobile device. On the computer, the website is fine, but on the phone, the website sucks. So download the WAP app. And as an added bonus, and there's no extra fee, right? I am doing, which is called the Smart Money Mentorship. That's what I'm gonna call it now. The Smart Money Mentorship. Study the Smart Money Manuscript. That's the course. And the Smart Money Mentorship is every second Saturday, right? We had our first one on September 13th. Every second Saturday at 11 a.m. Eastern Standard Time, right? I meet with you inside the SMM live channel inside the course and do a Q&A, right? And it's just based on any questions that you have pertaining to any of the information that's inside the Smart Money Manuscript, right? It's specifically for the Smart Money Manuscript every second Saturday at 11 a.m. Eastern Standard Time, right? And for those who may have already purchased the course and wasn't in attendance, because we didn't have it, I was gonna change my vote. Now I'm not replacing it. I'm a live. Y'all know I'm a live stream channel, man. I like to sit here and just talk to y'all, man. I like to talk to y'all. I don't like to, you know what I'm saying? Y'all my people, man. I like to talk to y'all, you know what I'm saying? Face to camera. Face to mic. Like to talk to y'all. So let me go for those who have already purchased the course, or for those who's thinking about purchasing the course. If you go to the Smart Money Manuscript on your device or on your computer, right, you'll see a channel. It's sort of like I think about like Discord. You'll see a channel that says monthly Q&A schedule, right? This is where you'll see our next Smart Money Mentorship. That's what the SMM for in this channel right here. Our next Q&A is on October 11th at 11 a.m. inside the SMM channel, right? You'll see like the bat signal. This is where I was initially posting about the live streams until I figured out how to do like a schedule like this right here. And this is the Smart Money Manuscript, what I was talking about. See, it says 5 chapters, 40 lessons. It's 2.5 hours long, right? So I've taken everything I've ever talked about through hundreds and hundreds and maybe even thousands of videos, right? And I put them into lessons. It's not 40 videos because it's counting the videos and the quizzes. You have a video, like this is a 3-minute video, 4-minute video, 4 minute. I think the longest video in here through the whole thing is like 15 minutes, but most of them is anywhere from, just say, 3 to 8 minutes in length, right? Very concise. And you have a quiz to test your knowledge on each video. Five question quiz. Now, my lovely wife, she's like, she was struggling with the quizzes. I say, are you looking at the content, baby? And she was like, I thought I was, but she's not a tester. She was like, why couldn't just be one question? Why it had to be 5? I said, it's only 5 questions. Come on. Why couldn't just be one question? Or maybe 3? I'm like, it's always the ones that's closest to you. It's always the ones closest to you. I'm just going to say that. I said, baby, it's just 5 questions. Come on, man. You got to test the knowledge. How much am I really testing your knowledge with only 5 questions? So imagine 1. Come on. Come on, man. So, yeah. So, and this is where we meet in the SMM live channel right here. You'll see my face inside the little screen there. I don't have like the little fancy background like this right here. It's just me and you. You actually see my wall over there. I think you can see the picture there. You actually see my wall back there. and you just looking right at my face. You know what I'm saying? And we have our Q&A right here inside the Smart Money Manuscript live stream channel, or the Smart Money Mentorship live stream channel, because it's mentorship. I'm there guiding you through, you know what I'm saying, all of your pertinent, because I'm a live streamer. I like to interact with you and answer your specific questions, right? I like to answer your specific questions because I'm a live streamer. So that's an added benefit for the Smart Money Manuscript, all for $69.99. No extra cost to you. Now, yes, now let me clarify. The podcast is not a replacement for the price action recap throughout the week. It's not a replacement for any of the live streams that I do. What the podcast is it's going to be a weekly wrap up of price and the economic calendar side of it for those who care about that stuff. So it's going to be a weekend wrap up of the price over the whole week, just like how when I do the price action recap and I look back through the price for the whole, sometimes I'll just do one day. Sometimes I'll just do a part of a day. Like if I get to talking a really long time, I may only look at price action for one specific time and then be like it. But the podcast would be me doing a price action recap for the whole week, breaking down the price for the week, and incorporating any economic data that happened during that week from the economic calendar. And then at the end, it'll be a forward look at the economic data that's coming up for the next week. And I haven't decided if I would put I haven't come on in, Charmaine. All right. I haven't decided if I want to put a forward look at the end. I know for a fact I'm gonna put a forward look of what's coming up on the economic calendar, but I haven't decided if I'm gonna put a forward look at the price for the next week. And I'm thinking about incorporating earnings data for earnings season and stuff like that. So it'll be a more well-rounded type thing, not just looking at price action. It'll be, I'm still playing with the idea in my mind. So yeah, it's not replacing the live streams. Where did Charmaine go? All right, man. I don't like how y'all be running away. Y'all be hiding from the Zoom, man. I don't like how y'all be hiding from the Zoom. Y'all be thinking I'm gonna ask y'all to say something. Y'all be hiding from the Zoom. All right. Shout out Marco. Shout out Here to Learn and Share. Shout out Valentine. Hola. Shout out Sturdy AF. Wazam. Okay. I see more numbers than I see names, but them know the names that I see, so them all the names I'm gonna say. Y'all do all the like, comment, share, subscribe type stuff that they always be talking about. I just prefer to watch on my TV. That's what's up. I appreciate you. I appreciate you for watching on TV. Rhonda, what you doing over there? Rhonda, you over there on Instagram? If you don't get over there on the YouTube, oh, you ain't over there no more. Okay. If you don't get over there on YouTube, if you on Instagram, go to YouTube. All right. Since we on Valentine TV. Valentine. Valentine, if you don't get that balled up cover off your couch. Valentine, yeah, y'all. Valentine got a balled up cover on the end of the couch. Been sitting up there in. Is that an empty pretzel bag? Is that an empty? Man, if you don't get that empty pretzel bag and that balled up cover off your couch. Hey, man, let's get to it, man. Let me share my screen. Y'all don't mind me. Y'all look at the screen over there. Let's get to it, man. We nothing can stop price. We all the way up, right? Have y'all been watching the IC? Shout out to everybody that's been doing the ICT watch parties with me in the gang. Have y'all who in here been doing the little watch parties with me in the gang when we watch Michael videos together? Put it in the chat if y'all been on the if y'all was on the little watch parties with me as we go through. I remember somebody had told me, they were like, man, I like when you stop and give your opinion on stuff or whatever they said. They was like, I enjoy this. It makes it better to comprehend when you like pause it and give your breakdown of it or whatever. Have y'all been on the live streams with me when we looked at the video? See, that's why I like the Zoom, because there ain't no delay on Zoom. Y'all can just instantly respond. But on YouTube, I got to wait for you to type. And if you're looking at it on your TV like Valentine, you can't even type, right? Valentine, you ain't get a chance to hang out yet? Where you been? I agree with whoever said that. I've been watching on my own, but I'm usually at the W2 when you do the watch parties. Okay. So yeah, now let me ask y'all this. The ones that was in the watch parties with me and the people who I don't like being in the corner talking to y'all. Let me go back full screen. The ones that was on the watch parties with me. You double dipping. You got the phone and the TV. I appreciate you, Valentine, getting my ratings up. Make people think a lot of people watching. You know what I'm saying? I'm trying to get like the little nephew, Tremaine. Man, when I oopsed up, I appreciate you, Brown Strat King. Brown Strat King. I ain't never seen that name before. And you say phone and TV all day. If you be kicking it with us all the time, Brown Strat King, and you just be in the background chilling, I appreciate you, man. But welcome if it is your first time. I'm trying to get like Tremaine. When I oops up on Tremaine by a year ago, Tremaine, I want to say he had like around the same many subscribers as me, by maybe 3,000 or 4,000 subscribers. Man, Tremaine got over like 20-something thousand subscribers now. He got like thousands of people inside his Discord. Man, I'm trying to be internet famous at 53, man. I'm trying to be internet famous at 53. How these people be internet famous like this, man? How these people have thousands of subscribers like this? You know what I'm saying? Are they going out there? I feel like I put out pretty good information, man. I'm just playing with y'all, man. I don't care nothing about no YouTube subscribers. I'm out here trying to help who I'm supposed to help. You feel me? If it's for you, him that has ears, let him hear. That's what the good books say. Him who has ears, let him hear. Right? Valentine said, I thought you ain't care about that. I don't. Let me tell y'all something. I say you do be encouraged. I found you over 2 years ago when I was a beginner. Your playlist for beginners. You reach. That's it, man. That's all I want to do. I appreciate you. Hey, I'm a petty old man, and a lot of stuff get on my nerves, right? So if I had this huge community, right? If I had this huge community of people that was like demanding, I would have shut down a long time ago. I'm talking about out of there. I can't take it. I can't take it. Right? That's why I try to, like just charge a little bit of money for my time, right? The stuff that I offer, I'm like, you need to get rid of your door. No, I don't. He had the door stay wide open. Right? So check it out, right? I just try to charge a little bit of money for the time that I put into it, right? Because I really don't want to charge anything. But it's like I just charge a little bit of money for the time I put into it, but I don't want this big mountain responsibility of like having to coddle and take care of people. And you have these, man, young and old people that come in with these unrealistic expectations and think, oh my God, oh my God, I'm getting a headache just thinking about it. I'm getting a headache just thinking about it. Let's get to the price action recap, man. I'm starting to get, I need an Excedrin. I need an Advil. Hey, uh, go ahead and put me on the TV, Venus. Put me up on the TV. I'm telling you, Venus, if you put me on that TV in your house junkie, I'm gonna talk about you. Don't put me on that TV in your house junkie. Tremaine, I just oopsed up. I oopsed up on one of his videos. Like it was like it had to be over a year ago. I oopsed up on one of his videos a long time ago, and I know it's been over a year, and I was looking for like a Discord community that I could be in and not be the leader, right? I was looking for a Discord community I could be in and not be the leader, because like I just be wanting to kick it and hang out, you know what I'm saying, and talk to other traders, right? And so I joined his community, right? He do like live streams and stuff, and I could just chop it up. I don't be like in the Discord. I can just chop it up in the chat, and people not look to me for the answers. Like, oh Tim, what do you think about this? Oh Tim, what do you? Because I you know what I'm saying, I will be at work all the time, right? So I was over there just low key hiding in the cut. And then I started noticing people like Felicia was over there. FC, y'all remember FC used to be in the gang. FC was over there. Deborah is over there. It's somebody else that's over there. Because I'm like, how did y'all find me? You know what I'm saying? But they don't be asking me nothing. They don't be like trying to get me to share no knowledge or nothing like that. But it was just my place where I could just go be around other traders and nobody know who I am. You know what I'm saying? And back then he was was offering like lifetime access to his Discord for $100. And so I just bought it, right? It was like $100 for lifetime access to the Discord. And you know what I'm saying, you get like all the live streams in the webinar, whatever, right? He was offering that back. And I bought it, just to hang out, right? And it's like he done blew up. He got like, you know what I'm saying, 25,000 subscribers, all that right there. But he blew up. And but I like my community. I love it. I love y'all. It's small. Y'all don't give me no headaches. Y'all don't be, you know what I'm saying, bothering me, right? Most times when I be getting stupid DMs, it's from somebody who's not in the gang, right? When y'all hear me complain about stupid DMs, 9.5 times out of 10, it's from somebody that's not in the gang. Every blue moon, somebody in the gang will send me something where I'd be like, did you fall down and bump your head this morning before you sent me this? But 9.5 times out of 10, it's not somebody in the gang that's sending me DMs, right? It's some idiot that saw me on Instagram Live or saw me on YouTube and want to send me a DM on Instagram or Discord or something. I get like a friend request, or and it'll be like some message attached to it or whatever. So, because I don't be knowing people's names, because y'all have so many different names on social media. So when I get a friend request on Discord, I'll be like, oh, maybe this one of the gang, whatever, trying to send me something, because I don't know why. Sometimes it'll let you send a DM to people, then sometimes it make you request them as a friend before you can send them. I don't know. But anyway. Oh, I don't know. I don't know how the algorithm work here to learn to share. It's some people seem like they just blow up. And I don't know what they be doing on their end. Maybe they be, you know what I'm saying? Maybe it be organic. Maybe their community like sends it to other people. Because one thing I've noticed, right, about people that be growing fast, right? It's like in a trading space, people that grow fast in the trading space, they be attracting a bunch of the trade copiers and people who don't want to learn. They just dare to try to copy you and try to see if they can get rich quick. Because when they see, they be like, oh, he or she know how to trade. If I go copy what they're doing, then I'll, you know what I'm saying? And then and the reason why I say that is because like inside his community, some people have their account set up to only allow DMs from friends, and others have it set up. Okay. All right. Right. Because what I've been noticing lately on the live streams, and matter of fact, I put this in the chat one time. I said, hey man, Charmaine, everybody, all the true blue ones, I appreciate y'all, man. But I'm gonna kind of fall back a little bit because I can't take all this stuff from these new people coming in. It's so much complaining in the chats now. Like if Tremaine take a trade off screen, so many people in the chat, oh, you trading off screen, I'm paying to see you trade, and you take it off screen and you only show the trade if it pan out, if it, and what's the big deal if he trade off screen? You're proving the point that you're here just to copy what he's doing, because he's talking about everything he's talking about, right? He's taking trades. Sometimes he take the trade right on the screen. Sometimes he take the trade off to the side. But why are you so upset? Because you didn't see him actually click the button. Everything he was talking about is playing out in price, but you're just trying to copy what he's doing. So you're not even paying attention to what he's teaching you. You're just waiting until he click the button so you can click the button too. Right. So, but it just I like I'm falling back. If I pop in, I might say something every now and then, but I'm falling back. I just, you know what I'm saying? So now my happy place really isn't even my happy place anymore, because people have come in and ruined it. Like a bunch of trade copiers have come in and ruined it. And I'm sad now. Thank you, here to learn to share, for make me think about how sad I am. Now I'm sad. Yeah. Yeah, he do need a door. He do need a door. And sometimes he be making me mad. I'd be like, Tremaine, get him out of the chat, man. And then he be like, nah, it's fun. I like for the trolls to be in here. And it just man, that bothers me. I'd be like, man, get him, kick him out, man. Y'all know I kick people out quick. If somebody come in acting crazy, I kick them out quick. I'm big on my energy, man. Ever since I retired, man, I protect my peace at all costs. You feel me? Right? All right, now. Marco said he tired of me running my mouth. He ready for me to talk about the charts. So let's talk about the charts. I'm sorry, Marco. We finna get to it. Am I sharing my screen? Yes, I am. All right, let me go over here. Oh, you know what I just noticed? Oh man, I just noticed this. If I leave this, if when I close my side window there, I cover some of the chart. But I be trying to figure out where to put this so I'm not blocking it. But I just figured out if I just leave that side window open, I don't cover any of the chart. So it don't matter where I put this. I don't cover it. I can put it all the way to the edge. Like that. I can put it all the way to the edge like that. And I don't cover any of the chart as long as I leave that open. I can even move it over to there. just like that. Yes, I can move it all the way over to there and never block any of the chart. There you go. I just learned did something. All right. I just don't like for that to be open when I be looking at my chart, but I'll leave it like that for the live stream so that I can go in here. Excuse me. Weekly high, weekly low. Oh, that's the month low. That's the month high. That's the weekly low. All right. So last week, all right, last week, okay, last week we talked about before, price just went up because this was not only is this the low of the week, not only did we make the low of the week here, that was the start of the week before last. I said last week because this week we're still in it. So last week, not Monday through Friday that just passed, but the previous Monday through Friday. Okay. This right here, if we come over here, that right there. So let me put these dates on here. The 14th and the 7th. No, the 14th, the 15th and the 8th. Okay. So this was the week starting on the 8th, right? So the week starting on the 8th, we made the low on that Monday's trading, right? Which was actually Sunday night, but we made the low on that Monday's trading, right? And we made the high on that Friday, right? So this was our weekly dealing range, right? It was a bullish dealing range where we just trended up. We talked about last week what we was talking about. This was the original silver bullet, and it was a low resistance liquidity run up into that monthly high that we have been watching to see if price was going to use that as a smart money reversal, right? And continue and start the bearish seasonality. But we said we are still in a buy program until we broke below this low here, right? The the buy program on the higher time frame was not invalidated until we broke below this low here. We was watching to see if that was going to be the smart money reversal as we started this sell program. Right, we came down, sell program, right, extended it a little bit here, right, extended the sell program a little bit there, right? But we said we're still in the buy program. This invalidates the buy program, right? We came down, swept that liquidity, then we made our way back up, right? Right? Made our way back up into new all-time highs on this original silver bullet right here, right? Well, we got that, right? And if you look at this whole area here, right? With the original silver bullet move there, look at this whole area there, right? Somebody tell me, right? You can give me any of the concepts that we talk about, right? It can be a price engine model, it can be a delivery, whatever you want to give me, right? Looking at this entire piece of price action right here. What is that right there? This entire piece of price right there. As you squanch up the charts and look at it, what do you see right here? It could be a price engine model. It can be a delivery method. What do you see right there? Get out of the way.
CERRD.
There you go. CERRD. And this is a delivery. This is an IPTA delivery method, right? Now, what is the price engine model that you see right here? Let somebody put it in the chat, Marco. Ain't nobody on Zoom but Marco, so I don't want Marco to talk himself to death, right? Marco gave us the delivery, right? Marco gave us the delivery. Now, what's the price engine model that's right here? Put it in the chat. What's the price engine model that we see right here? Come on, Smart Money Manuscript. I know y'all got the Smart Money Manuscript, $69.99. First link in the description below. Right? Come on, Smart Money gang. We talk about this all. There you go. Offset what? Offset is right, but offset what? Shout out Valentine. Shout out Marco. It sturdy just swing sturdy out. Whoosh, whoosh, whoosh. Y'all know I love it when you just be swinging and missing. Fastball, whoosh, whoosh. Curveball, whoosh, whoosh, whoosh. But sturdy swinging for the fences. Offset accumulation. Sturdy, you go, hey, you go throw your back out and you swing it. Yeah, keep swinging, pimping. You swing, you missing, but you go to keep swinging. Offset. So we got offset. We got offset accumulation, right? That's too much to spell out. We got offset accumulation, right? It is though. I said, Sturdy said it is, right? I said what? I said delivery method, if the delivery, and I said price engine model, right? AMD, market make my model. You got to read the question first. You got to read the question first. Y'all know how the professor, you know how to, when I was in college, right? High school and college, right? When I was in high school and college, the teachers and professors, they used to I promise you, at least once a year, I ran into some teacher, right? I said, exactly. I said it could be any of them. It could be the delivery or price engine models. Listen to the question. The teacher, they give out the test, and the test, the first bullet on the thing says, read this entire test before doing anything. That's the first bullet says that. And then the rest of them have you doing a whole bunch of stupid stuff. It'd be like count to 10 out loud. You know what I'm saying? It'd be like, you know what I'm saying? It have you going through doing different things. But the first thing says, read this entire sheet before doing anything. Market make my model. Hey, all right. So, in Sturdy's defense, right? you have accumulation, you have manipulation, you have distribution, right? So AMD is there inside this piece of price action, right? Just not what I asked for, right? You have a market maker sell model, you have a market maker buy model. It is there in this piece of price action, just not what I asked for. Right. But right here in this piece of price action, we have consolidation. Oh, for those who don't know what CERRD is, this is an IPTA delivery method, right? The other way, IPTA delivers in two ways, right? CERD, right? Consolidation, expansion, retracement, delivery. Consolidation, expansion, reversal, retracement, delivery. Those are the only two ways IPTA is going to deliver price, right? Does it over and over and over, right? So we got consolidation, expansion, reversal, retracement, delivery, right? And this overall little piece of price right here, right? And then with the price engine delivery models, right? You have offset accumulation and reaccumulation. Offset accumulation is when you accumulate, right? Long positions, right? You manipulate out the sell side, then you move back up, right? So offset accumulation is when you accumulate, manipulate the sell side, then trade back up. Reaccumulation is when you accumulate, expand, and then retrace to a discount. So inside this area here, looking at this entire area, that's your offset accumulation. And then just looking at this little piece over here, this would be reaccumulation because you accumulate, expand, and retrace to a discount. Offset accumulation, you accumulate, manipulate, expand, then retrace, right? So this whole little area there, offset accumulation and consolidation, expansion, reversal, retracement, and delivery. Brown, you say you're gonna have to watch it back. Hey man, run it back, man. Run it back. Run it back. But if you can't remember like where in the video it is, just pull up. We talk about the same thing every day, right? Why do we talk about the same thing every day, gang? We talk about the same thing every day because what? What two things is the most important to understand about ICT concepts? Not time, but what two concepts do you have to really get a hold of so that you can truly understand how to interact with price? What's the two things? Huh? What's the two things? Put it in the chat. I know distribution, reaccumulation. This offset accumulation is new to me. Oh, order flow and price delivery. You hear me? If you understand order flow and price delivery, man, that's all you need. That's right, Sturdy AF. Order flow and price delivery. Brown Strat King said this new to him. Come on, Smart Money Manuscript. What's order flow? Is it in order flow? Where's my price engine? IPTA. It's in IPTA. Let me find my IPTA. See, man, I'm all about helping the community, man. I'm going straight into the Smart Money Manuscript to help out Brown Strat King, because he said the offset. What you said was new to you. Where did it go? Watch this back. Oh, I know this offset accumulation is new to me. Yeah, he said offset accumulation was new to him. So we trying to help. Hey, nobody left behind. Let's find IPTA. I've talked about this a few times in my videos. Michael talk about everything I talk about is just stuff that I'm regurgitating from what I learned from Michael. If you don't know who Michael is, that's Michael Huddleston, the dude that created the ICT concepts. IPTA. Right here. Come on, man. Come on, Smart Money Manuscript. Right, IPTA. Right? IPTA, that's the intraday price delivery algorithm, right? It's the foundational concept, describes the algorithm, system of beliefs used to efficiently deliver price. IPTA is the framework, right? Right? IPTA is the why behind price action movement, right? It identifies, yep. What IPTA does. Yep, we got that. Dealing ranges. Maybe it's not IPTA. Might be it's not IPTA. Is it Where is it? Okay, might not be an IPT. Let's go to displacement, maybe. Displacement. Where is it? Shorts. No. What is IPT? Okay. I didn't even see my favorite little. Is it not an IPT? Where's one? Which lesson is it in? Y'all know. Y'all took the class. Budgeting. Order flow. Is it order flow? Order flow. Not order flow. Oh, yes, order flow. It's an order flow. Y'all should have said, Tim, it's an order flow. Why y'all ain't say that? Oh, you ain't made it? Brown Strat said order flow maybe. Brown Strat, you even know where it's at. You know where it's at. Brown Strat, did you you already bought the Smart Money Manuscript? He knew which lesson it was in. I'm looking through all the lessons. Okay. All right. Here it is right here. Right. So with order flow, right, you have buy programs and you have sell programs, right? The buy program is when price is moving bullishly. It's in bullish order flow. The sell programs is when it's moving bearishly. It's in bearish order flow. Okay. As inside of the market maker buy models and market maker sell models, right? Let me back up. Right? Let me back up. Everything. Let's do this right here. Right? Let's do this right here. I want to play this little piece right here first because I want to go to the beginning. Right? If I be taking too long to get to stuff for y'all, you know what I'm saying? The door right over there, but I ain't the kind of person that be like, oh yeah, it's just like one size fit all. You know what I'm saying? I have to explain. It take more than that just to explain it. Right? It take more than that just to explain it. Right? So everything, right? Everything about price is summed up inside like the power of 3. Okay? Everything about price. So when we go market maker model, when we go daily, when we think about everything already about price is built on the power of 3. Right. The accumulation, manipulation, and distribution pattern can be observed across various time frames, from the formation of individual candles to daily trading sessions and even monthly market moves. It's also a key component of the price delivery and market maker models. This repeated 3-step cycle is foundational to understanding institutional price delivery. As we learned in earlier lectures, the formation of a candle can represent any amount of time. So we can often see the power of 3 in the formation of a candle. With an up close candle, and then if it move, that it will see everything got the power of 3, right? You would have making a low income. You have your accumulate. If the price delivery models, the power of 3 can be seen. With consolidation, that's your accumulation. When you expand and retrace, that's your manipulation. And then the delivery is your distribution. Then with the second delivery method, the consolidation is your accumulation. But in this one, you have 2 stages of manipulation where you expand in the opposite direction and then reverse. And then you have a retracement that manipulates again. And then you have the delivery, which is your distribution phase. The entire premise behind market maker models is built off the power of three. You have your initial consolidation, which is your accumulation phase. You have the manipulation phase when you move to opposing liquidity. And then you have the distribution phase when you return to the liquidity that was engineered in the beginning. Same thing with the market maker sell model. You have your accumulation, your manipulation, and your distribution.
All
In
right.
summary, the power of accumulation, your manipulation.
Okay. So, right, when you have your different levels of distribution, right? Well, we talk about accumulation, but it's the same thing. Your price engine model, you have two price engine models for going down and two price engine models for going up. Distribution is when you're going down, and accumulation is when you're going up on your market maker models, right? So if you have an area of distribution going down or area of accumulation when you're going up, right? You got two price engine models that work, right? You can have offset distribution or redistribution, and you can have offset accumulation or reaccumulation. Now, it gets confusing to some people, even me when I first started, because you see second stage reaccumulation, but this reaccumulation is not talking about the price engine model, right? Excuse me. It's just talking about it's accumulating again. You see what I'm saying? So the way I look at the market maker models, anything on the right, I just say right? I look at all of this as reaccumulation because it's on the right side of the model. I look at this as redistribution because it's on the right side of the model, meaning again, because you got second stage distribution. Distribution, second stage redistribution, meaning you're just redistributing again, you're reaccumulating again. Now you have price engine models where the type of movement that it's doing describes what's going on, right? So when you have a reaccumulation price engine model, right, what's happening is, let's come here to our slides here, right? With offset accumulation, right? When you got offset accumulation, right? Accumulate sell side liquidity by repricing under lows, right? Sell stops will be triggered and offset current long positions or induce sellers at discounted prices. Price will seek higher short-term premium arrays to offset positions. You see the formation of a Judas swing. You got a sharp move in a specific direction that looks like a genuine breakout, right? It'll trigger stop loss orders and attract new traders who believe they are entering in a legitimate trend. Market sharply reverses in the direction of the true directional move. That's offset accumulation, meaning you have a area. Jesus, how many things I got open, right? You have an area of consolidation, right? Then you manipulate out the sell side, forcing short traders in that believe they're entering in a legitimate trend. And then the market sharply reverses in the direction of the true move. That's offset accumulation, right? Now, get out of here. Get out of here. Reaccumulation, right? These are the price engine models. Reaccumulation, they reaccumulate fair value and retracements lower at a discounted rate. Weak longs will be squeezed in the retracement lower. Allow smart money to reaccumulate new long entries and induce more sellers at discount prices. You'll see expansion followed by a retracement, right? So reaccumulation, right? When you're on the right side or left side, right, of a market maker model, right? You will see price. Let me find a spot where it's clear. Let me go higher to see if I can find a clear example of it. All right. This kind of trending, but it gives the idea, right? This is kind of trending, but it give the idea, right? Where we're in this area here, where we're just accumulating here, then we expand up, then retrace down to a discount, then we move up. That right there is a reaccumulation price engine model, right? And if you squeeze this up, right, you see here, we got a market maker buy model here that's going on, right? And then we come here and you're accumulating there, you expand up, then you retrace, then you're pulling up. Even though we've at this point here, we pretty much completed that market maker buy model, right? But that's where you're looking for that on when you're inside your market maker buy model. You look for an area where price accumulates, expands up, then retraces back down, right? You're coming back down to a discount PD array, and weak longs are getting squeezed out by this retracement back down. Might even got stopped out there, but this retracement back down is a squeezing out the weak longs, but that's the price engine model of reaccumulation, right? So this is where they be saying I cannot reverse. So this is where they be saying we cannot reverse from consolidation. I've never heard anybody say that. Yeah, I've never heard anybody say that before, so I can't speak to it. Yeah, I can't speak to it. I ain't never heard nobody use that before. IPTA can, why it's called weak longs, because you just don't have your pocket's not as deep. Your pocket's not as deep as the smart money, right? So think about it like this right here, right? Let's just say, right? Um, yeah, they say price don't reverse from consolidation. It's a continuation signature. Um, nah, not really. Nah, you can't really say that. You can't really say that because it's about understanding where you are in price. Put a pin in it. Somebody remind me that I'm about to say it's a now consolidation being a continuation, can't reverse from it. It's about where you are in price. Somebody remind me that's where I'm at, the thought that I'm gonna go with, and hopefully I can get it back. All right, so week longs, right? Week longs. Just say um you get in long here, right? Say you get in long here, right? And you say, okay, I'm getting long because we're trading down into the wick of this bullish order block. So I'm getting long there, right? But I can only, let me see here. I'm getting in, we trade into this bullish order block right there. But this is as far as I can risk. I can't risk all the way down there. This is as far as I can risk right there. Okay. And as price is moving up, right, you can't really afford to risk a lot, or you start to trail your stops or something like that. Or let's just say you get in long here off this fair value gap, right? And you put your stop here, right? So we're using different scenarios here. One person, they get in long on this fair value gap there, right? And the most you can afford is the low of the fair value gap candle, right? This is person two, right? Person two, okay? right? That's person two stop loss. Right. And then this is person one stop loss. Right. Person one stop loss. Okay. So boom, we're going to trim this off now. Right. So person one entered here on that retracement into that wick. Tim, you're doing a whole lot just to explain this. I know it ain't never just a simple answer when it comes to this. If somebody tells you it is, they're lying. Call Cap and tell them to move away. All right. So person one entering off this bullish order block wick, right? But they placed their stop loss at that swing low right there, right? Because they said if we come down below that swing low, that's invalidating their thesis. Person two, they enter here. This is all they can afford to risk. They can't afford to trade it to the stop to the swing low. This is all they can afford to risk. But this right here is the mandatory stop. We all know you have mandatory stops and you have safe stops when you trade in ICT PD arrays. That's what I call it. That's not what he called it, but you got mandatory stops and safe stops, right? Based off how this PD array is made, right? If it's strong, we should not see that low, right? In case price wants to come all the way to the order block, you're safe up under the swing low because the order block should block price. Okay, that's your safe stop. Mandatory stop, safe stop. Only thing you can afford is the mandatory stop. This person right here, right? This right here invalidates their thesis. All right. So when price, right? Price moves up there like that. This person here, right? This person here, this expands away. Now they're like, okay, we've expanded away, right? Now I can move my stop, right? Because price, right? Price came here, right? Came down, and we expand, and we've made new structure here based off of where I entered. We've created new structure. We've expanded away. We've created structure here. We've expanded away, right? So now this person here says, hey, I can now move my stop here, right? Below this order block, right? I can move my stop below this order block, right? Because, right, now I'm locking in profit, right? I entered here. Price has formed structure. I entered off this structure. Price has formed new structure and moved away, right? So I'm protecting my profits because I believe if price comes down beyond this, right, I may be on the wrong side and I want to take my profit, right? Or, right, whatever your thinking is, right? This person here who entered here, they're like, this is all I can afford to risk. So this is where my stop is, right? So now price is expanding away. Everybody's happy. Everybody's doing good, right? Then price starts to pull back, right? They're not worried. But all of a sudden, bow! Their weak longs got taken out because their stops were in the line of fire, and it's called weak longs because their pockets isn't deep enough to have their stop down here. Either you trailed your stop prematurely, like you hear Micah saying, don't choke your trade, let your trade breathe, right? Because they didn't realize, hey, this monthly high right here, that is a higher time frame PD array, right? That's a higher time frame PD array. When we look at the I was having a PD array matrix. I was having a brain cramp. I couldn't think of the name of it. When we look at the PD array matrix, right? When we look at our PD array matrix, okay. God dog it. I keep trying to click on my brush, but I keep forgetting it's a picture. Right. So when we look at our PD array matrix, right, as price is coming down, right, because the way the PD array matrix works is, right, when you're bullish, you get above all of the PD arrays that's created, and then you trade back down into them to buy off of, right? So when you're coming back down, right, what's down here at the bottom of the PD array matrix? The first thing we want to think about is an old low. But guess what's also down there? An old high, right? So when we trade it up above this monthly high right here, right? And then we started to retrace back down. Guess what is below price when you're up here? An old high, an old monthly high, a very high time frame PD array, right? So when price traded back down, not only did it come down to the order block, whose job is to block price, right? It also came back down to a higher time frame, old high, which is a discount PD array when you're above it, right? So these weak long sell stops were forced out. And guess what also happened, right? Not only for the people who were in trades and protecting their stops, right? See this little swing low right here? Guess what breakout traders are waiting to do? They're waiting to get short because we're up at all-time highs and we just have to come down. So as soon as price trades below this swing low right here, there are sell stops in there for people who aren't in positions, and they're waiting, chomping at the bit to be the first one to short all-time highs and become king of the world by saying, I shorted all-time highs, right? And then, boop, now they're tripped in short. Trader 1 and Trader 2, they're taken out. And then IPTA turns around and delivers back to the buy side, right? Just because Empire Trader said, please save this video for me, I'm not going to save it. If I was y'all, I would hate me. I appreciate you, Empire Trades. Tell Mike Pence fly I said, what's up? Take it easy. Yeah, so those are the week longs, and it's just the reverse for the week shorts. Okay. Now, what was I saying? Save it for Deborah. I definitely won't save it for Deborah. What was I saying? What did I tell y'all to remind me? Consolidation. Something about consolidation. What was I talking about? Consolidation. Reminder above. Okay, remember, consolidation being continuation is about where you are in price. Thank you. Here, learn and share. Okay, so shift the focus from what we think and what people think, right? Put the focus on order flow and price delivery. Okay. put the focus on order flow and price delivery. The reason why order flow and price delivery is important is because if you understand order flow and price delivery, right, you can identify if you're in a buy program or a sell program on any time frame, and you can identify where you are in the price delivery scheme of things. Okay, so when you look at your chart, right, let's go to a daily chart. Okay, when you look at your chart, right, as we have been speaking about, okay, we make sure you're still in here. You still here, Brown Strat King? You still in here? Y'all know I don't like talking to a specific person and they be gone. You still in here, Brown Strat King? We want to hear it though. I don't care. This ain't what we need to hear it either way. This ain't what I signed up for today. I signed up for price action recap and chart prep. It's all 1 o'clock. I've been on here since 11:30. Ain't nobody going back and looking at a 4-hour live stream. Brown Strat King gone, y'all. So, right, we talk about order flow and price delivery. Okay, so it's not so much about, oh, you can't reverse from consolidation. It's a continuation thing. That's not true. Right? That's not true. It's about order flow and price delivery. Because when we come here and we look at our daily chart here, right? We look at our daily chart here, we understand that right now on the daily time frame, right, we're in bullish order flow. Okay, we're in bullish order flow on the daily time frame. So the higher time frame is in bullish order flow. Right now, since the higher time frame is in bullish order flow, I got to keep that in mind, because now because the higher time frame is the leading factor behind the overall trade ideas, right? It doesn't mean you can't trade against the grain, but whatever the higher time frame order flow is, that's the leading factor behind the overall trading ideas. Okay, you want to, the most ideal situation for trades come into fruition when all of the time frames align and agree on order flow, right? If the daily is in a buy program and price has moved to a discount, the 4-hour is in a buy program and have moved to a discount. The 1 hour is in a buy program and has moved to a discount. The 15-minute is in a buy program, has moved to a discount. The 1 minute is in a buy program and have moved to a discount. All the stars have aligned, and that's going to present the beautifulest trading opportunity in the world, because all of the time frames are in a buy program and price has moved to a discount. Everybody agree, right? Everybody is in agreeing. So you know exactly where you are in price as far as delivery. Okay. So when you see price consolidating at that point, now you can say, hey, this consolidation, right? I'm going to watch this consolidation to see if I'm going to get some type of offset accumulation or distribution, or if I'm going to get some type of reaccumulation and distribution, And then I'm going to look for my entry based off of the higher time frame narrative. Okay, follow me. All right, so we're consolidating here on the daily time frame. Okay, if I go up to a monthly time frame, right, and look right there, it looks like nothing. It just look, you know what I'm saying? It's nothing right there on that daily time frame, right? Because on the monthly time frame, we're in the middle of expanding, right? We're in the middle of expanding after we have come off of a consolidation, a retracement, and moving into a reversal. You see what I'm saying? Moving into a reversal. But on this monthly time frame here, this consolidation here mounted up a full reversal move there, right? You consolidated, you expanded, and you reversed from this area of consolidation right here, right? So you consolidated here, you expanded there, and then you reversed here, right? So it's not that you can't reverse from consolidation. It's about where are you in the sense of price delivery. Okay, because looking at this monthly chart right here, right, and if you include more data, right, if you include more data there, right, you see we're consolidating, you expand, and you're reversing there. But if you go farther back, you're consolidating, you expand, you retrace, right? You expect you expand, you come up here, consolidate, expand, retrace, you deliver. You're above the high, right? You consolidate, you expand a little bit, you retrace, you deliver. You're back above the highs, right? You consolidate here. Here you consolidate, you expand, you reverse, but here you consolidate, you expand, you reverse. So it's all about where am I in the sense of price delivery, right? Because I can look at different segments of time and say, oh, I'm continuing or I'm reversing, or so there's no such thing as you can't reverse from consolidation. That doesn't exist. Where are you in the sense of price delivery, right? From the time aspect. How much time are you looking at, right? What time of the year it is? How much time am I looking that has passed, right? What's the time set that I'm using, right? Am I looking at it quarter over quarter? Am I looking at it month over month? Am I looking at it hour over hour? How much time is in my data set, right? Am I getting a complete portion of time? Have I completed a market maker buy model, or am I jumping in the middle of a market maker buy model, right? And thinking that I'm in a market maker sell model. It's all about, you got to see, it takes more to understand than, oh, you can't reverse from consolidation. That don't exist. All right, now let's go in and look at it in more detail. Okay, are y'all tracking? Am I losing y'all? I think the question makes sense when I think about it, because with both, we expand in the same direction before later reversing, right? We expand in the same direction. I think the question makes sense when I think about it, because In both of these, we expand in the same direction before later reversing. I don't know what you mean by expand in the same direction. It reversed from the expansion, though, not the consolidation. Oh, I just covered it. Okay. All right. So, and it's like I say, it's about the time and price and the data set that you're looking at. Because if we look at this right here, right? If we look at this starting at from the eighth, right? Seems like all price did was just go up, pull back a little bit, sweep some liquidity, and then continue up, right? So it just looked like it's going up. We got a whole bunch of trend line liquidity down here that's still untouched. All thing we did was take out that internal liquidity there, but we got all this trend line liquidity that wasn't touched, and all we did was go up, 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 right? But if we zoom out some and get more information, right? If we zoom out some and get more information like this right here, right? You can see that we had a whole retracement, right? And then go up there. So we had an expansion, a retracement there, went up there, came down here, went up there, right? So when we look at it overall, only thing price doing is climbing up, right? If we look at a larger set of information, right, on this lower time frame here, right, and not look at all, because price is fractal, right? Price is fractal. So we want to think about how is it moving overall, right? Because we can look at all the little nuances inside here, right? But in the general scheme of things, right, this is what price is doing, right? Price is moving like this, moving like that. And what is that right there? That's bullish order flow. That's a uptrend, right? That's a uptrend. We're making higher highs and higher lows, right? Making higher highs and higher lows. That's an uptrend. That's bullish order flow, right? Bullish order flow. All right. Now, when we look at, all right, when we look at this bullish order flow, all right, so we're going to take this here, circle around all of this here on this hourly time frame, and then we go up to like a weekly chart, right? We go up to a weekly chart. What is that right there that we just covered? Y'all remember on the weekly chart what we were saying from when we took out this all-time high back here, right, in June, right? What was we saying about when we took out this all-time high right here in the back of June? What were we saying about this area right here? With the exception of the last 2 weeks, this week that we just did, and the week starting on the, what was that, the 8th, right? With the exception of the 8th and the 15th, right? What was we saying about this little area right here? What were we doing? Right? We was just consolidating, right? We was just consolidating. And when we said that's normal when we come to an anticipatory reactionary point for price to consolidate, because now we're trying to see if we're going to continue or if we're going to reverse. Right? Why are we looking to see if we're going to continue or we're going to reverse? Because we've come to Picasso's house. We've gotten to our anticipatory reactionary point. So it's normal for price to go into a consolidation pattern, because what is it doing? It's starting to engineer liquidity. Right? It's starting to engineer liquidity. So now that we've come to the end of a market maker buy model and we're going into a consolidation, right? When you complete a market maker buy model and go into a consolidation, what can that consolidation be? What can this consolidation potentially be when we complete a market maker buy model? This consolidation can be what? The start of what? for more clarity, right? Right here, we completed a market maker buy model right here. When we traded above there, we went into a consolidation. What did this consolidation turn into? Right?
Smart
That
money reversal.
yeah, did not only the smart money revert, this did not only the smart money reversal here, but this consolidation became the what? It became the what? Yes, we started the sell model, but when you start a sell model, where do you start the sell? What's the first part of the sell model? The sell model starts with what? Just like the market maker buy.
Redistribution.
What does it start with? What's the first thing it starts with? Initial consolidation. Very good. Right? So that initial consolidation for a market maker sell model is the start of a reversal when you complete a market maker buy model. So you can reverse off of a sell, off of a consolidation. You see what I'm saying? So we come here, and in the sense of this right here, we're completing a market maker buy model right there. And you say, Tim, we didn't consolidate. We did. We stayed there for 3 weeks. 1, 2, 3. We stayed there for 3 weeks, right? The consolidation ain't got to be huge, right? So we complete a market maker buy model right here, right? We start consolidating, and then this consolidation started a market maker sell model, right? But guess what happened here? We took out that buy side, and we came down and we took out that sell side. That's a full reversal. Buy side to sell side. Complete reversal right there. And it all started, this reversal started from that consolidation right there. So it's about, where am I in price? Where am I in the sense of order flow? I mean, in the sense of price delivery. Where am I in the power of 3? Right? Am I at the accumulation phase? Right? That's a consolidation. Right? Am I at the manipulation phase? Am I at the distribution phase? Right? And inside the manipulation, guess what's going to be inside the manipulation? There's going to be some consolidations going on during that manipulation phase. Right? When you're in that distribution phase, there's going to be some consolidations happening in that distribution phase. Right? So it's depending on the time frame you're watching. It depending on where you are in the sense of price delivery for that time frame, right? So hopefully that makes sense. Hopefully y'all, you know what I'm saying, understand what I'm saying, right? It's all about order flow and price delivery, not just the fact that, hey, you can't reverse from consolidation. That's not true, in my humble opinion. All right. That was a good one, man. Shout out, I can't remember his name now. Shout out that person, Strat King. I think it was something Strat King. Strat King, I think it was. Shout out him for asking that question. We done been on here for a real long time, and we didn't get to the price action. Let's get to the price action. Do anybody got anything else? Let's get to the price action. Right. So looking at the daily chart, right? Looking at the daily chart, this was the beginning of the week here. Excuse me. This was Monday. Right. This was Monday here. Monday. Right. We took off to the upside. Okay. Took off to the upside. Friday, we finally took out that all-time high that we have been watching for a while. Okay. Looking here. We were just working. We was watching that high. This when we start that sell program there, right? We traded up to a premium, came down, extended it slightly, right? At this point here, we talked about when we reject the low, right? The reasonable target would be the high that sent you there, right? So we're watching that high right there, right? Traded back into that high, and then we continued up into the all-time high. Okay. Once we've reached the all-time high here on Friday, starting out this week on Monday. Boom, we take off straight to the upside. Right now, y'all remember last week what we said? When we open up, we took off straight to the upside. We said it's going to be an extremely bullish week, or we're going to set up a bearish week. That's the first thing we said last week when we started out straight to the upside. It's either going to be extremely bullish or we're going to set up a bearish week. Okay. Extremely bullish week, straight to the upside, right? Just kept making higher highs and higher lows on each day, right? Each day made a higher high and higher low, right? Straight to the upside, extremely bullish, right? No type of retracement at all. Now, starting out this week here, right? Starting out this week here, if you notice, from last Monday up until Friday, right? What do you notice about last Monday to Friday, going from day to day, right? What don't we have until we get right here on Friday, between Friday and Thursday, right? Well, we got one right here, but this one right here is down, way down there. But what don't we have at all in here? I'll just say like that. What don't we have in at all for this week right here? What's missing out of this week right here? No fair value gaps, right? We ain't got no fair value gaps at all coming up this week. Everything is very efficiently delivered, right? Everything is very efficiently delivered. Okay. Now, seeing that everything is very efficiently delivered, right? When do we leave this area here from the high, right? When do we break outside of this box right here, right? We break outside the box right there on this day, on Friday. This is when we break outside that box right there. All right. So when we're trading in price action, when we have back and forth price action like this right here, we offer sell side, buy side, sell side, buy side, right? And then we leave that area, right? What is this area now? When we leave that area, what is this area right now? What has that area become? When we leave it right here, a balanced price range. Very good, right? So now we got a balanced price range there. Okay. When we leave that balanced price range, right? Let's blow it up so we can see it really good on this daily time frame. When we leave that balanced price range, right? What do we create leaving that balanced price range? Right here. What do we create right there? We have right. Yep. So we got a fair value gap there. We created a fair value gap as we left that range, right? So as we left that range, we create a daily fair value gap, and we got this volume imbalance here, aka that's from a Friday. That's from, let me see, that's a new day. Yep. So that's a new day opening gap, right? That's a new day opening gap. All right. So we got a volume imbalance here, and we have a fair value gap there. Okay. Now, Michael teaches if you have a volume imbalance that connects to a fair value gap, you include the volume imbalance, right? If price, right? If price, there's no volume imbalance there. Let me see. The closing price there is 352.75. Opening price there is 353. Okay, so there's a volume imbalance there. All right. Yeah. So there's a volume imbalance there. Okay. So he teaches if there is a volume imbalance, right, where the wick, this wick, that wick does not exceed consequent encroachment, right? You include the volume imbalance as the total inefficiency, right? For the fair value gap and the volume imbalance, right? There is a small volume imbalance there. So the first time when I marked this out like that, right, and the wick was passing consequent encroachment like that right there, and I was like, I just mark it like this, just treat them separate because the wick extends consequent encroachment, right? That was incorrect because there is a volume balance up there. So that's the full inefficiency and it doesn't exceed consequent encroachment. But either way it goes, right? Even if I didn't notice that one tick difference right there, right? And that might have been because on the older contract, there was no you know what, it wasn't, because on the old contract I just put a line as that new week. It wasn't a new week opening gap, it was just I just had a line there. So that's why it was different on the old contract. I remember now, right? So even if you look at it with just the fair value gap and the volume imbalance, right, it's still, right, a discount inefficiency that price can come to that's above, that will be support for this balanced price range, right? But just looking at the overall inefficiency, you've created this inefficiency coming out of this balanced price range, right? So now when price expands up, you're not looking from here up to there as your dealing range that you're watching, right? You're not looking there. You're looking here where price left this balanced price range as your working dealing range. You're looking at the latest expansion of your current dealing range. So when price expands away from this above this high, right, you're looking from here to there, right? If you want to include the order block, right, you can look from here to there because there's your order block in this expansion right there. All right. This is your order block when you expand up right there. But me, I just like to watch this portion of it right there. And either way you watch it, this is still your discount PD array to buy off on for this retracement there. So this whole week there, all you did was expand, right? You expanded this entire week, right? Monday, Tuesday, Wednesday, Thursday, Friday, right? You're expanding. Come into the next week, the expansion is continuing. Monday, Tuesday, right? You finally peak out at the top, right? And then you retrace back down into the discount on Wednesday, right? Coming into our week. So Monday, we continue the expansion Monday and Tuesday starts the retracement, and then Wednesday continues the retracement back down into the discount, back down to your discount PD array, right? Not only did you trade to the imbalance, you traded into the wick of the order block, right? Whose job is to block price, trade down into the wick of the order block, and then we expand back up, taking out the high, right? So in the sense of order flow and price delivery, right, we're in bullish order flow, right? We're in bullish order flow. We come to an area, a huge area of consolidation, right, that we haven't talked about. We're in this huge area of consolidation, okay? And then once we start to expand, right, out of the consolidation, okay, we start expanding out of the consolidation. If we look at this week here, right, because this was a Friday and this was a Tuesday, this was the holiday, right? This week here, we come down, we expand down, take out the sell side on Tuesday, the first trading day of the week, right? Once we hit the sell side, right, Wednesday, Thursday, Friday, we're expanding up, right, to the buy side. Monday, Tuesday, Wednesday, Thursday, Friday, we're continuing to expand up. So 2 weeks in a row, we're in this expansion, right? For 2 full weeks in a row, 2 full weeks, right? We're inside this expansion right here, right? Then Monday and Tuesday, we continue this expansion right here. Now, during this expansion, right, we've come outside of a balanced price range, right? So in the sense of price delivery, we have delivered above this balanced price range, and now we're anticipating this to be used as support because we're in bullish order flow, right? We're in bullish order flow. Uh-oh. Y'all, I done been on here so long, and my mama calling. I done been on here since 11:30. What, you look like you at the church, Punkin? Man, I've been on here for a long time. Man, I've been on here for 2 hours. Say what, Punkin? Yeah. What you doing? What you doing? It's Ladies' Day? Ladies' Day, yeah. Yeah, it was Ladies' Day. I'm gonna get on live and get my last 5 minutes in. I'm partial now. Look here, and they still in there laughing and talking. Brother Banks say he lives. Y'all hold on for a second. Man, she said she gonna call us back later. She was late anyway. They just finished up they just finished up a latest day at church. She was late calling us anyway. I ain't realize how late it was. We've been on here forever, man. But like I was saying, so in the sense of price delivery, right? We have delivered above this balanced price range. And in a sense of bullish order flow, once you get above a balanced price range, you anticipate that to act as support, right? So price delivery and order flow, you want to always keep that in the forefront of your mind, right? And when you look at what, like we said in price delivery, right? We was consolidating here. And once we took out this, we touched this sell side liquidity within this consolidation, right? We started to expand up. Okay. We start to expand up. So, in the sense of price engine models, right? This right here is a reaccumulation price engine model because we're accumulating, right? And we expand up and then we retrace to a discount, right? And then we deliver back above the highs. And again, remember what we said. This retracement is to a discount because once we come outside of the balanced price range, right, we're looking from when we leave the balanced price range, right? So in this sense, when we leave the balanced price range, right, when we leave the balanced price range, personally, I like to focus on when we actually leave, but you want to remember you have an order block here. So you can look from your order block to when you start to retrace back to figure out where is my discount in this range, right? Because your order block, where's your order block? Your order block is at the opposite end of your range in the sense of your PD array matrix, right? Your order block is down here, right? Your order block there because your rejection block and your old low, right, is connected to your order block, right? It's going to be connected to your order block because your rejection block is the wick that swept liquidity right before you reversed and went back. So the order block is sitting down there at the bottom of your dealing range. Okay. That's how it creates it. So you have your order block here, right? And then your long wick right there. That's your rejection block. And then that's your low, right? Your rejection block and your low is connected to your order block there, right? So we expand up and then we come back to a discount, right? This is your equilibrium of the range, right? Your inefficiency, right? Volume imbalance, fair value gap, volume imbalance creates your entire inefficiency, right? Remember what we said about your inefficiencies when it comes to these quadrant levels, right? When you're bullish, right? You're looking at how IPTA created it. If it left the majority of that inefficiency below the quadrant, when you're bearish, did it leave the majority of that inefficiency above the quadrant? Remember, we talked about that. Michael talked about that, right? Looking at our inefficiency, the majority of this whole inefficiency is below the quadrants, right? That equilibrium point, right? You got your fair value gap, you have your volume imbalance, and it's inside the wick of this bullish order block, right? What do we say about wicks, right? What do we say about wicks? The wick right there. What do we do with the wicks? We grade them. We focus on the consequent encroachment, but we grade the wicks, right? And we grade that wick. What does this volume imbalance align with? The upper quadrant of that wick. When price is exceedingly bullish, right? What do we want to see it respect? That upper quadrant, right? We'll take consequent encroachment, but we want to see it respect that upper quadrant, right? But look, right? What did it already touch on this day, on this Friday? This Friday already came down and engaged with the consequent encroachment of that. And we got up off of it, tapped it, got up off of it, showing that it's bullish. Tap the consequent encroachment, respect the 25%, and created a volume imbalance, right? Signatures that it's still bullish. Okay. Signatures that it's still bullish. When we create our dealing ranges, start the retracement, right? What do we come back down to? We come down to our discount PD arrays, right? What do they say? Wicks do the damage, bodies tell the stories, right? Because look, we have a fair value gap right here that we're totally respecting, right? But this wick comes down and does a lot of damage. Where does that wick go to? Right? It goes and does several things. Takes out sell side liquidity from this day right here, right? It reprices a small volume imbalance in a BISI with sell side delivery. It trades down just below consequent encroachment of the volume imbalance here, and it totally respects the upper quadrant of this discount wick before rallying back up and closing, respecting that fair value gap right there. Right. So on a closing basis, it has respect every discount PD array in this price leg up here, but it still closed extremely bullish, right? But this wick did a lot of damage, but it didn't go to some somewhere of ambiguity. I cannot say that word. So it didn't just go to some random point. It went somewhere algorithmic, right? Went somewhere algorithmic. And then once we now, in the sense of price delivery, we see now, because when we come into a new day, right? What do y'all say all the time? The algorithm don't care nothing about our man-made stops and starts, right? Y'all hear me say that all the time. The algorithm does not care anything about our man-made stops and starts, okay? And the reason why I'm walking through it like this today, when I said we came over here on a Tuesday, right, at the beginning of the week, right, we traded down and tapped this sell side inside this consolidation, and we started expanding, right? It's the beginning of the week. It's the first day of the week. So in our mind, when we think about the concepts, right, when we think about the power of three, what's the first step in the power of three? Somebody tell me what the first step of the power of three is. The first thing that in power of three, what's the first part?
We need accumulation.
Accumulation, right? So that's the first thing you think about in the power of three, accumulation. So when you're starting the week, right, and you're looking for the power of three, the first thing we want to look for is accumulation. But the algorithm cares nothing about our starts and stops. The algorithm just cares about what was the last thing it was doing, right? So as we start this week, we straight off into expanding, right? And then when you really think about it, when we start this week, we went straight into manipulation, right? If you really think about it, because we went down and took out sell side and then turned back around. That's manipulation, because we took out sell side and immediately turned around. But when we think about the power of three, we're starting the beginning of the week. This is the beginning of the week, right? And we're dropping down, taking out sell side. But here's the gag, right? Here's the gag. This downward move started on a Friday. So on Friday, we started pulling back. We started this retracement on a Friday, right? So on a Friday, we started this retracement, right? So Friday, we started retracing. Tuesday, right, we continued the retracement and tapped the sell side. Then we started going back up. So we were in the middle of a retracement and moving into an expansion from Friday to Tuesday to Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday. Right? So that's $10 days we were expanding to the upside, right? 10 days we was expanding to the upside. But when we think about price, we always want to start at the beginning. It's a natural thing, because we're just not coming to the charts. We're just looking at it on Wednesday. We're just looking at it. But if we back up, zoom out, we can see, where are we in price? Where are we in the sense of price delivery? Right? Once I figure out where are we in price, now it's time for me to see, are we in bullish order flow or bearish order flow? And if I understand, okay, I'm in bullish order flow, this where I'm in price delivery, I can start to get my bearing. I can start to say, okay, is it time for me to look for reasons to engage, or do I just sit back and chill? Okay. Now, I feel like I'm cooking today. Y'all don't let me start running my mouth. This right here, buried so deep in the live stream, ain't nobody gonna never know this exists. We 2 hours and 6 minutes into the live stream right now. Ain't nobody gonna know that these gems exist. Now, right? Broke outside of the range. This is the dealing range that we're watching. Price comes back to a discount, right? And then it delivers above that high, right? Right. So now we're like, Tim, we don't have anything to look for over here as potential price targets, right? Oh, don't worry. Michael teaches about all of that, right? Now, when it comes to structure, right? You can use your fib tool to look for potential targets, right? And what do you use? You use the institutional market structure, right? Now, the further you get away from where you anchor based off the institutional structure, the more inaccurate the projections are going to get, because other things have happened in price that can give you a more accurate pinpoint spot to project to, right? So when you're looking for your institutional market structure, right, we have this little thing where we got this little man, right? He smiles because he's important. He's an important piece of structure, right? So when you find, right, 3 swing lows that form a swing low, right? Like you have a low here, right? And you got a higher swing low to the left and to the right, right? Balanced price range need to get out of the way. I said I was going to leave that open, right? To the left and to the right, right? He's so happy because he's an important low, right? He's very happy because he's an important low. So since he's such an important low, right, you can anchor right there and you can go right here. Let me do this right here. I said I was going to start doing this, clicking what I want before I anchor it. Bullish projections. You can anchor right there on the low, and you want to pull it in the direction you want to project to and go back to the high, right? And go back to the high. Now, that right there will give you some reasonable targets you can shoot for. Okay? It can give you reasonable targets you can shoot for. Now, when you're looking for targets, right? The way Michael teaches it, he teaches it in half deviation increments, right? So if you're going to pull your fib tool in the direction that you want to project, you want to use negative numbers for your projections, meaning negative 0.5, negative 1, negative 1.5, negative 2. And as you're looking at a half a standard deviation at negative 0.5, a full deviation at negative 1, 1.5 deviations, 2 deviations, 2.5, 3 deviations, and so on and so on and so on. That's if you want to anchor it and pull it in a direction you want to project. Meaning if you want to project a bullish projection, you anchor it at the low and pull it up towards the high. If you want to project a bearish projection, you anchor it at the high and pull it down to the low. Okay. And what high and low is that? It's the to the left, up and to the left, down and to the left. You're pulling it to the left. All right. So up and to the left. Anchor, right? Anchor and pull up and to the left to the high in that dealing range. That's your high, that's your low, right? And it gives you projections. And as you see here, price, because you want to see how far can this price leg, right, swing up, right? When you come up, make a high, you come down, make a low, and you want to see how far this price leg here can swing up. How far can it swing? Swing, swing. Now, every time y'all put y'all Fibonacci tool on, y'all gonna be like, how far can it swing? Right? You want to see how far can it swing up, right? And as you see here, in the case of all this consolidation, once we left outside of this consolidation and started to expand, right? It expanded up to a half a standard deviation before retracing back. All right. What do we always talk about at those halves, at those 0.5s in the? You said something to me, Junior? Oh, right. At those 0.5s, what happens at them 0.5s, right? We either see a consolidation or a retracement. What happened right here at this 0.5 standard deviation? We got a retracement, and we retrace back down into where? A discount, right? What is that discount? That discount is below the halfway mark of our current dealing range or area that we need to be watching, right, for price to give us a retracement. Why? Because we consolidated, expand, retraced, right? Now we're moving in that delivery, right? Now we're moving in that delivery. So based off of the daily time frame at our institutional order flow, right? Why? Because that's our important low. Remember, we talk about our important low. He's smiling because he's so important, right? It's a low it's a swing low with a swing low to the left and right of it, giving us an intermediate term low. He's happy because he's important. So you anchor it there, pull it back to the high, right? And half standard deviation was there. One standard deviation is here, right? You can close your position there or take some off and hold it to see if we get 25,145 and a half, right? This is how you get realistic projection targets when you don't have any structure to look to. You can't say, oh, we're going to go to that high right there because there's nothing there. This is how you get realistic algorithmic projections based off of structure. You can't just go in and pick any swing low and swing high, right? You want to see, when did the elephant step in the pool? Well, when did the water move? And if that doesn't work, come back and we'll figure it out, right? Elephant stepped in the pool, drop. Stepped in the pool, drop. Stepped in the pool, drop, right? What did it form? It formed a happy face. Oh, look at that happy face. He's important low. That's what I'm using. Low to the high. That's how you get your realistic projections, right? So, you say, but Tim, I wasn't even looking back that far. That's a long time ago. That low was from August the 1st. Who's looking that far back, man? Remember what I told you, right? Time and price is fractal. Stuff happens where you can, stuff happens in price where you can get, you can do the same thing. All right. So we'll come over here and we'll look at this current week: Monday, Tuesday, Wednesday, Thursday, Friday. Right. So looking at the current week, we're going to drop down to, we'll go down to 15-minute time frame. That'll work. 15-minute time frame. 15-minute gives us a lot of detail, right? So right here, this is the start of the week right here, right? So we come here, we start the week off here, trading, right? We go up above the weekly high right there, trader here. We go up above the weekly high, we drop back down, right? And we come up here, right? Once we come up here, now, once we're coming here, right? What do you notice here? 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 All right. From there to there, come here. We got us half standard deviation. We got us full standard deviation right there for this move here. Realistic targets, right, of how far we could swing up, right? And we see here, we come up here, trade up, we get us a retracement back down, right? Now this right here, that's the half standard deviation from the higher time frame up there, right? That's a half standard deviation from the higher time frame up there, but we retrace back down, right, into that balanced price range right there, right? That's a deep retracement coming down into an order block, very deep retracement. Okay. Not only do we come down into that deep retracement order block and balanced price range, we come all the way back down to a reclaimed fair value gap right there. I see that reclaimed fair value gap. Where's that reclaimed fair value gap in that balanced price range resting? Oh, it's right there at that deviation point from the higher time frame. Though remember those quadrants we talk about, the algorithm gonna create these very specific PD arrays at these quadrants. Oh yeah, it came down to that stuff right there. Okay, right, and then that could have been an entry based off of this here. This could have been an entry. This could have been an entry. All of that could have been an entry based off of how far can this price leg swing. And then there's a realistic full standard deviation move from this price range right here. Okay, right, that's a realistic expectation based off of the institutional price structure, right? Institutional structure, right? Even if you're not looking all the way back on the daily time frame, right? It's fractal. It gives you the same concept, right? Gives you the same concept because why? Right? We've come above all-time highs, all-time highs, all-time highs, right? These are all-time highs. So if I trade back above that, how far can price keep going? Right? How far can price keep going? Okay. Y'all get it? Get it? Got it good. Right? It's all, everything is like, it's all fractal, right? Price is fractal. You do the same thing as you keep going, and you can do it, and you can even do it inside of what's names, right? You can do it inside of structure. It don't got to be at all-time highs, right? Inside this structure right here, right? You want a realistic target to shoot for, right? Based off of, you believe it's going to draw into that high right there, right? You believe it's going to draw into that high right there, right? We come over here, right? You see price coming down, right? We trade down, sweep this liquidity, and we come back up, right? And then we come over here, right? We got us, right? Actually, we got a little eye right there too, but that make him look funny. So we're going to use this over here. I'm an important low. I'm an important low. Get that eye right. I'm an important low. I feel so special, right? So we come here, click there, go back to that high right there. That's the high when we drop down there, right? And then we can project up there. This is the high that you anticipate price going back to. This is the deviation that's above that high, right? That's a 2 standard deviation move. It's the deviation that's above that high. This is a realistic target, 24,810 and a quarter. Why? Because based off of the institutional market structure, right, this is the deviation move in half deviation increments that's just above that high. If you want to be conservative, right, you can go to the one that's just in line with it below it if you want to be conservative. Okay. Right. But if you want to be conservative, right, you would have reached your target and wouldn't have to sit through this huge drawdown right here. Right. This huge drawdown, because when we're looking at the reaccumulation price engine model, what does the reaccumulation price engine model says? It says that weak longs will be squeezed out during this reaccumulation price engine model. We accumulate, expand, retrace to a discount PD rate, and week longs are being squeezed out during this retracement before coming to that standard deviation projection that we took from there. Oh my goodness. Oh my goodness. I feel sorry for the people who didn't stick around, because ain't nobody gonna know that these gems are buried in this live stream. That's all I got, man. That's all I got. That's all I got. Somebody better stop him. Somebody better stop him. They don't like this. They do not like this.
Don't be telling nobody to stop you now. You know them people pop up.
Oh man, what?
don't be asking for what you don't want.
The master debater will pop up.
You already know, calling you all kind of slurs and all kind of bad names.
Here Learn and Share said this Saturday study hall was a great masterclass to complement the Smart Money Manuscript. Thank you. Speaking of the Smart Money Manuscript, the first link in the description below, $69.99 for the Smart Money Manuscript. Y'all see, we opened up the Smart Money Manuscript today and played a clip from one of the videos, looked at some of the PDFs, talked about the stuff that we're talking about right here today. It's something in there for beginners to advance. It's something in there for everybody. $69.99. You can't beat that, man. That's all I got, man. Thank y'all for spending a great, vast majority of your late afternoon late morning / afternoon with me. I appreciate y'all for breaking all your brunch dates and all of that right there. For those that stuck around, you got a gym on a gym, right? If you was able to weather the storm of me flapping my gums. We never really got into a real price action recap, but I think the stuff that we did cover today was very much so needed. And I hope you got something out of it. Again, let me see here. I have put up a poll up there. I appreciate everybody that voted. Thank you to everybody that voted. It says 100% yes on the poll. So I will start doing it. I don't know when I'm gonna actually your grass calling you. I don't know when I'm gonna launch it, but I'm gonna start doing it. So it's gonna be like it's gonna probably drop on like a Saturday. It'll probably drop on a Saturday, either Saturday or Sunday, but it's going to drop on, and it's going to be covering the weekend price action. And I'm going to tie in like the economic calendar into it. And I'm also going to include stuff like earnings for I ain't going to do earnings for everything, but I'm going to do earnings. I'm going to include some earnings, something that like might catch my interest or something like that right there during earnings seasons and stuff like that. But, you know, don't hold me hard and fast to a whole bunch of like earnings season stuff and fundamental stuff, but I'm gonna try to incorporate some of that stuff too. But it's gonna be a weekly pre-recorded video that drops. It's not gonna be like and it's not gonna replace my live streams. I'm still primary live stream channel. I like to interact with people, right? It's just gonna be something for people who just like to sit down and watch pre-recorded videos and just get the information, right? That's it, man. Till the next time I decide to get on Algo's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. It's just Big Spider. If you don't upload and spend, y'all be safe out in these straight and streets, man. I'm gone.